Hi everyone, I wanted to make an actual presentation here, a lot better looking than the ones that I've done recently. And I wanted to make this very brief and short, and something maybe that people could probably reference a lot better than kind of the other videos that I've made. So the objective is, like I said, simplify the market profile studies. The acronyms, I want to make sure that I have those identified well. I'm going to do just a very small amount of chart examples. And the biggest thing that we need to pay attention to is we have to study the previous day levels. But the biggest thing I really want everybody to kind of comprehend the most is just the acronyms that we'll be using. So market profile acronyms, POC, point of control, and that's basically where the price where the trading most occurred, and it's considered the fairest price. VAH and VAL are the upper and lower levels of the value area. So it's basically the volume area high and volume area low. Excess, it is seen at the tops and bottoms of the profile, and it indicates the end of the auction and the start of a new one. On a candlestick chart, which is the one that I use, excess is represented with a 30-minute candle with a long wick. PHL, it's called poor high low, basically mean it's a poor high or a poor low. It means a lack of excess, low confidence in current direction, showing no tails and conviction of traders stepping in. And usually with poor highs and lows are often revisited. On a candlestick chart, these would be short-term double tops and bottoms. Single prints. They are the same as an excess but happen inside the profile. They leave low volume nodes of liquidity gaps. So they tell us the market moved too fast through the area. These are inefficient moves that tend to get filled. So make sure you pay attention to that. And we can seek trading opportunities once they get filled, or we can also enter before they get filled and use these single prints as targets. And then, of course, the last one is initial balance. IB, and it is a range where price spend its first two TPO periods after the open, usually about like an hour. It is the range of the first hour after the market opens. But the gist of it is days with a wide initial balance gives us early signals of range bounds, and days with a narrow initial balance gives us early signals of trending days. So I want everybody to make sure. I think when I first learned this, single prints, XS, and the PHL were the ones that I had a little bit of a struggle, but I'll tell you guys the difference once I give you the example. All right, so the colors that we're using specifically for the market profile that I have that I've customized for my indicator, POC is orange, VAH and the VAL are going to be blue, XS is going to be a purple horizontal bar, PHL is going to be red. So it doesn't matter if it's going to be a high or a low, it's going to be a bar, like a little small red bar at the very top of the market profile. So if, for example, the high is going to be, if it's a poor high, it's going to be at the high of the market profile. If it's a poor low, it's going to be at the low part of the market profile. And then single prints are these turquoise horizontal bars or whatever. I don't know, they're not bars, but they're horizontal. And the initial balance, it's going to be navy blue. They're parallel lines with dots. I forgot to put that there were dots. All right, so this is an example of what we would basically be looking for. So the POC is going to be the orange. Actually, before I do that, for those that aren't familiar, so this whole bars right here, the blue bars and the gray bars, that's the whole market profile. And we have the extremes of the highs and the lows. This might not have been the best one, but it's okay. So this one is the whole market profile that we have, and the blue area is the area of value. That's the one that we're going to be paying attention to the most, because it shows us, for the most part, usually initial balances within that area, which is marked right here. And you guys can see that there's the blue dotted line, and there's the high of the initial balance and the low of the initial balance. And within this area of the value area, you're going to also see the value area high. That's that blue line right there. and then we have the value area low, which is at the very end of the dark blue, which is, well, not the dark blue, but the blue, that is the area that is considered the value area. So if we look to the left, you guys will see more of what the value area looks like. So there's the parts that are gray, and then we have the other ones here at the bottom of the gray. But we have the value area that's right here, and we have also the value area right here. So there's the high, and there's also the low. And we also have the POC that's orange right here. Now the excess is going to be the purple bar. You guys will notice that it's up here at the very high, and we have some right here as well that's purple. And we've also had a previous excess that's here to the left further down in the chart, and then we have excess down here as well. We're going to look for the PHL, which is this red little block, I guess you could call it, and that's the PHL. Single prints are going to be the turquoise horizontal ones right here. We've got some up here. Got a second one. I have a very small minor one right here as well. One that's relatively thicker than the previous. And then we have one here higher as well. And then, of course, like I said, initial balance, that's the navy blue parallel lines right here that's happening. And that one is with like the little dots. So what we will typically do is, as you guys can see right here at the bottom, right by the excess, we, as the market is forming, we like to study the previous days. So as you can see, this one's forming kind of low, but you guys will notice that there was some sort of previous excess, remember, because that's purple. We have a previous excess here from a long time ago. We also have a previous, some sort of value area, high or low. We're not really sure. But we also have a previous POC. Same thing over here. We have a previous high or low of some value area that we have as well, right? But you notice that once this market profile was formed, it basically went to all of these little areas. Once it broke through this area right here of the initial balance and the POC, you'll notice it started filling these previous value area right here. That previous day right here was that high, and then broke past the previous day's POC and even technically the initial balance. But we're not going to really look at that part. We just want to look at the value area highs and the lows, the POCs. We're going to also want to make sure we pay attention to the PHL. Remember, that's red. We want to pay attention as well to the excess, which is this purple. We don't have anything for the turquoise, which is the single prints. But when we do have that, that's definitely something we'd want to pay attention to. So I'm just going to kind of leave that up a little bit. That's kind of like the little cheat sheet. And I just want you guys to pay attention to the previous days that happen, and pay attention to, all right, where is my POC? Where's the value area highs if there's any previous days? And the biggest things you need to pay attention to is, where are my excess? Where's my PHL? And where's my single prints? Those are those primary ones, levels, areas that you really want to pay attention to. The initial balance is helpful. You can do a couple of things with them, like what I was stating with this one. Once the initial balance is formed and you started noticing that it's coming down, and that would be a good opportunity to wait for a retest. For example, this massive move right here. So you already knew it was moving down because it started penetrating this area here, the value area high from this particular day. So then you're going to anticipate either retest this area again, or it's going to retest the POC or the initial balance. It all just depends on what other confirmations that you have as well. So what we're going to do is we're actually going to look at some more examples on the charts. I have already pulled up August 25th and 22nd. I have a little bit of cheat sheet right here, just as a reminder of what we're working with, just so that we remember what the colors are, what they all mean, and so forth. So as you guys can see, just taking a look at it, definitely a lot of lines that was already formed. So remember, when we're looking at this price, we don't typically see this happening. Like we don't typically see this forming as the market itself is doing is forming. It's happening. So that's why we always look at the previous day and any other these lines right here as well to help us determine what position we're going to go for, or where the market we feel like the market might go to, or logically after more analysis where it's going to go. So this was actually similar to the example that we had with the presentation, right? As you guys can see, because when the market's forming, none of this appears until after. So this only appears completely at its full potential when this market right here forms. Does that make sense? I hope that makes sense. That's why we're always looking at the previous days, because that's where most of the data that we're going to be using, right? So as this is forming, let's just say, we're not seeing, I don't know if this is going to pop up. Hold on. So as this day is forming, we're not seeing, ooh, that's horrible. We're not seeing, all of this activity that's happening right here, right? We're not seeing all of this, the blue and the gray and the excess. None of this is here. None of the single prints are here. None of that. So we're basically just looking at this area that's happening. But while it's doing that, we want to still pay attention to, well, what exactly is it doing? So I'm going to open this up just a little bit more, and you guys will notice that price hit up a previous level here, a value level of some sort, and there was some sort of, look at that, single print and possibly another value area as well. So that would have been an area I would have been paying attention to the most. It would have been this and around here as well, only because this is a value area high on the 24th and on the 25th. So you could have waited exactly kind of how the market formed itself. You could have either waited for it to go up and hit this area, because that's a high probability that price is going to go up there. And I forgot to also say that there's a previous POC. So not only do you have a previous POC, like I said, you have the value area high. There's some sort of single print. You guys can't see it. I don't know if you guys can see it. But there's like a single print there and another value area as well. So this whole area, at some point, price might have gone there or will go there, and it did. And then, of course, like I had said on a previous example, you could have waited for like an initial balance, wait for it to go down, and then if price broke through this value area high in this POC, then that gives you the confirmation to keep basically selling, aiming for, there's a bunch of these excesses right here. There's one, two, looks like two or three here, another one and another one, and then a previous POC. So you could have aimed for these little levels that existed right there. You probably could have put a trailing stop loss, but you wouldn't have known how low it was going. So you could have probably just aimed for the POC, the previous POC that's right here. I'm going to move this to the left. So we're going to take a look at the 24th and the 25th. So we have here the PHL that's right there. POC, value area high, value area high. Here's the initial balance. And we have a very, very small excess that's at the bottom here. And we have, it looks like a couple of single prints as well. I'm not sure if I said that already. So if we look at the left, this one didn't seem to have penetrated. Oh, I'm sorry. The single prints are these are previous single prints. I apologize. So these are previous single prints. So what probably would have happened is, I guess you could have waited for a retest on the initial balance if you wanted to trade it that way, and aim for the single prints that are up here. Or if you wanted to, I guess depending on what time you wake up and things like that, because this would be like Asian session right here. So you might have not seen this. Who knows, depending on if you trade like just the New York Open. Let's see. New York Open would have been like right here. Yeah, 9:30-ish right here. So depending on how you would have traded that, you could have, if this formed, if this value area low here was formed and you still click on that, either way, it's still pretty close to the initial balance. So you could have probably done that as well. Waited for this this price and then still aim for the single prints. So let's look at the left here. Single prints or the poor level high that's up here if you wanted to aim for this one. So you've got multiple options in that one. All right, so let's look at the left. I'm actually going to move this down because I want to show something to you guys. So we're going to look at the left, the 23rd and the 24th. Yet again, here's value area highs, high and low, POC. Here's the value area in the blue. Initial balance is the blue parallel lines. We have excess, that's the purple. We have a PHL over here. That's a poor high that we're looking at. And you guys will notice that, remember, poor highs, I'm going to pull this up real quick. The poor high is a lack of excess and are often, poor highs and lows are often revisited. So if you look at it, it got revisited again from this previous day, or the next day, I apologize. It's the next day. And so I guess with here, just another example, probably would have waited to see if this excess, the purple line right here, was going to get, meaning if it was going to basically go down, if price was going to go down this way, then I would have aimed for a short. I would have waited, maybe put some limit orders down here. And if it didn't, then that means I'm going to go up and aim possibly for, at this current situation, if I didn't see any of this, I would have aimed for these excess right here. I'm sorry, not excess, these single prints that are up here as well. Either way, if you did hold it, depending on how comfortable you are in holding positions, it would have made it up here. So anyways, I'm hoping that's enough examples for you guys. If you just identify what the POCs are, value area highs and the lows, the excess that you have, the poor high, poor low, single prints, and the initial balances, you can definitely use that to your advantage. So just take some time on the weekend, a couple of hours, mark up your charts, and just study it. That's all you need to do. Just study where the previous levels are, previous POCs, value areas, single prints, poor high, poor low. Just study it, and then at some point, whatever your strategy is, it's going to combine exceptionally well with this indicator. And I haven't even added anything else. I haven't even really studied, actually, we haven't even talked about it with the ADD. I haven't even talked about it if we were going to add EMAs or anything. So with EMAs, I'm going to do another video with that to help with understanding the trend, because this indicator shows us areas of where price may go, but we want to basically see if the trend is going to be going our way. And if it does, then that's perfect. Then that means that we'll be hitting, for example, we'll be hitting these areas right here. So these are just examples, brief presentation for it. I don't want to go too much into it. I'm going to do more videos, more back testing for NAS, Dow Jones, and other assets, just 3 assets that I'm going to be looking at just specifically for this indicator. Anyways, I hope this was helpful, and I'm hoping this is nice and short. If you guys have questions, feel free to message me or let me know below.